Good day and welcome to today's quarterly report. We shift our eyes to Danish Risk Intelligence, who published a report of the third quarter of 2021. With me today to comment the report, I have Hans Tino Hansen, CEO. Welcome.
Thank you very much, and thank you for the opportunity to be with you today.
Of course. A revenue of 4.2 million in Danish currency this quarter, an increase of 20% compared to last year's third quarter. Costs have also risen, however, a 12% increase this quarter. Could you begin by walking us through these changes?
Yeah, on the revenue side, the growth comes from a combination of new clients, where we signed 3 new maritime clients in the third quarter. It's also an increase in licenses of existing clients during the renewal in third quarter, where we had a renewal rate of 100, so a churn of 0, and also a growth in advisory service projects. When we look at the costs, they have mainly been investments in sales and marketing and other future-facing activities that will have an impact on the pipeline in Q4 and especially in 2022. If we look at the first 9 months of the year, we had a cost increase altogether of 4%.
3 new maritime clients. What can you tell us about them?
Yeah, the 3 new clients are one with this operating within offshore, and then 2 within transportation of LNG.
LNG transportation.
That is liquefied natural gas, and it's a huge growth area in transportation of gas. What happens is that you liquefy gas by dropping the temperature under pressure, and then you can actually move gas with tankers, and that's been going on for many decades. But because of the increase of use of gas, this is a very big growth area, both in production of energy, but of course also the transportation of liquefied natural gas.
Moving to existing clients then, no churn rate either this quarter. Could you tell us a little bit about the renewals this quarter and the increased volume of your existing agreements?
Yeah, we have had 100% renewal, as I mentioned, and increases in the size of some of these, and include especially one was significant for the growth of the ARR, so the annual recurring revenue in Q3, and it has mainly been a number of users within the licenses that have been increased.
In press releases during the quarter, you noted an increase in demand for your advisory services. Is this increase correlating with recovering markets following the pandemic, or are there other factors in play? What do you think?
Prior to February 2020, we did both on-site and off-site surveys and assessments in ports and on ships around the world. And this has been on hold due to COVID-19 travel restrictions until September, where we carried out the first on-site survey on a ship on off-site Crete. We expect more to come during 2022. We have had desktop, so what we call off-site assessment and reports. That has been the main product during 2020 and 2021. And we expect that we will not get back to where we were prior to February 2020, but we will probably more see a hybrid between remotely delivered products and surveys and those that are physical. But there is still room for growth.
What are some of the benefits of off-site advisory?
Off-site advisory is obviously the cost and the time associated in producing the product, because if we need to go to a ship in Crete, we need to send 1 or 2 guys with a plane to Crete, and then need to stay overnight, at least 1 or 2 nights, do the survey. Of course, the quality of the actual survey of the port of the ship is much better, but we have developed some tools and using cameras and video cameras to actually have people filming for us. It's obviously not the same as being there, but it's much better than just doing it according to photos and plans.
From sea to land then, last quarter we talked about LandRisk Logistics, and in October the service was announced as fully operational and has attracted interest from European markets. Tell us more.
Yeah, we have launched a campaign for LandRisk Logistics, and we've attracted interest from a range of companies and organizations. Some of these were already testing at the end of the development and test phase of LandRisk Logistics. and others have been joining recently. The markets that we are dealing with is third-party logistics providers. So that's mainly large logistic companies. It's logistics and transportation companies. So mainly focused on the actual transportation of cargo on land side. It's manufacturing companies, industrial, pharmaceutical, luxury goods, tobacco, and similar. It's global brand owners that are not European, but may have at least sales, but sometimes also production in Europe, which have high value cargo. It's trading houses and platforms. So some of them are large and some of them are more medium sized. And then we have government and defense and organizations that deal with transportation and logistics and the security of those.
That is quite a sample. Has this interest changed your expectations for LandRisk heading into 2022?
Yes, we already have a good pipeline with a range of positive discussions with potential clients that are in different stages from test trial phase up to final negotiation. Most of our clients is, as I think I mentioned before in interviews, they are large corporations and complex organizations that demand a partly bespoke, so a customized product with their own integration and some of their own data and similar, which also means that there is a longer lead time up to 6 to 12 months compared to our maritime clients that you can consider it more as transactional sales with a lead time of 3 to 4.5 months, where the clients that we're speaking to, you can more compare that to solution sales. We are looking into the smaller and medium sized market, and which will be more likely and more receptive to products without any integration or customization or similar, which would mean at least kind of by the look of it, a shorter lead time.